Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. My name is Joe Nikruto, as always, here with
Dan Hussey.
Dan.
How are you, Joe?
I'm doing great, man. How you doing?
Good. It's been a good
We
week.
have a lot of stuff to cover today. The headlines certainly have not stopped price action with this government shutdown, so we're left to you and I to hash it all out for folks right now. I suppose we're going to dig right in. What's going on your side of the Indiana-Illinois border?
Not much. It's starting to cool off a little bit, but I'm not going to complain, right? We still got this beautiful late summer weather. Nothing really to report on my end. I think when it comes to the markets, I think we're all just sitting here waiting for the status quo that we've had for the last couple months to change. And man, it just seems like, I don't want to say we're into like doldrums, but it feels weird. It feels like we're in the middle of summer doldrums, but it's in the middle of harvest. It's a weird feeling, and I think a lot of people feel that way.
In our conversations over the last couple of days, our folks, we've been seeing some level of frustration with the type of news action, the type of headline-driven markets that we have seen. Do you personally feel that this has been a drag? Do you enjoy this kind of price action? How's it working for you?
No, how can you enjoy price action that's unpredictable, right? Like you never know when that next tweet or news headline is going to flash. And like we were talking about, is going to get picked up by algorithms and then spun through the market. Last Friday was a remarkably volatile event in markets. Many of the macros, you saw massive risk decoupling. And that was all based off of the back of a tweet. And now you're starting to see, and the comments on China and tariff deals. Now you're starting to see the same thing happen in other markets. We're going to get into the limit down day here in cattle and the feeder cattle and what that could mean. But you've also got other markets like corn and beans that have been rather immune to this type of effect, which I think that's a good thing. So I'm optimistic that we're seeing constructive price action on our row crops. Haven't been too detriment by your latest headlines, but that also concerns me because it makes you wonder, okay, well, if they're saying these things, if it's supposed to be positive for this, that, or the other, or negative, and it's not, then it still leaves us kind of scratching our head because we are trying to, at some point, at some level, trying to predict what price is going to do. Over the last 2 weeks, there's not much that has really changed. So do I like it? Not really. I like when price discovery markets can move and discover where they want to be, when we can find that true value in those points of control that markets want to move around. That's the type of market I like. But I will say this last week of price action for row crops is surprisingly constructive for time of the year when you're not expecting it to be at peak harvest pressure, all of those things, right? So that does, I think, speak to the robust support and strength, and maybe even do I go as far as to say, a real new normal to the low end of price is being formed here. And like price for the next 5 to 10 years, right? Like maybe corn doesn't want to be below 4. Beans don't want to be below 10. Wheat doesn't want to be below 5. And I think that brings a smile to my face to some extent. And I think to a lot of producers across the country that say, okay, as bad as all of this stuff is that's been flung into our face over the last few weeks and months, prices are pretty stable. And that's not a bad thing.
Some talk from well-heard commentators about how, with no government reports to get in the way, these markets have
there just is no bad news, right?
and maybe trade real fundamentals, of which we don't necessarily make a huge deal out of that in this venue, but a lot of talk about some of these government reports and the makeup of them, and how some people feel about that. And I just thought it was interesting that in a time where there was no, or very little, rather, government data, that these markets have pretty much done okay on their own. I don't know, shall we, let's get in before we begin, let's talk about, as always, keep in mind with everything we talk about, especially government-related conspiracies, that futures trading does involve risk of loss. We want everybody to examine their own risk profile, their own enterprise needs, and take that into consideration before engaging in this type of trading activity. Having said that, some of the risk here recently has been in corn and beans and certainly wheat. And what we like to do here is just jump in and take a look at the week and say, here's where we stand. So Dan, I'll tell you, the least amongst what we're looking at here, or what I would rather just pass on by, would be wheat. So we do the thing that we don't want to do the most for the week. Yet another new low in December. Chicago wheat. We opened the week at 4.99 and a quarter. The high was 5.05, low 4.92. Last trade we saw was 5.03 and three quarters. That was up 5 and a quarter on the week. That's incredible. Yeah. Seeing as how we carved out a new low there yet again. Another week. I think just about every week that we have visited here, except one or two in the last 8, 10 maybe, has been a new weekly low. This has been just a vicious grinding lower in wheat, but maybe some constructive price action here today.
Yeah, like Joe said there, I got that weekly chart up now, and you can see like this is the first green close on the week that we've seen in a long time. Look how oversold it is on the weekly RSI, and we have been since July. So, I think we've all been kind of in the back of our minds. If anyone who's looked at that wheat chart thinks to themselves, okay, at what point, and we've talked about it here on air, at what point does this market get that short covering rally back to the 100 and 200 day moving average, as it seems to do every few months, right, throughout the year, and at least once a quarter? I feel like wheat wants to do that. And okay, so we're starting to, I think, see some constructive price action off the lows. The 18 day moving average is still just above us here at 509 quarter. 50 and 55 days around that 520 figure. 100-day moving average is around the 540, and that 200-day way up there still at 571. You start to overtake this downward sloping trend line, that 18-day. I think that's the buy signal here for Chicago wheat. In the short term, we definitely have had just this drip off of volume, oversold conditions, and peaking with open interest here, because we are going into that end of life for December contract. So it makes sense that if this has been a highly driven fund speculative short, you're going to see some roll, you're going to see some profit taking. It's into the end of the year here. So anyone that's short wheat, start covering it here. Buy it back. Do a guy a favor and take your profits, right? Because that will help move the market a little bit higher. I say that a little facetiously. I do want to point out that this week we did have that outside day key reversal in the KC contract, which is already up towards its 18-day moving average. So already seeing some signs of reversal in our other wheat contracts. Love to see Chicago pick its game up and do the same.
Here, I'll go on record and help out the entire wheat complex and say this price action that we have seen week after week further supports the idea that wheat will never, ever be good again. And so when you look at this chart, you think there is absolutely no reason for optimism, and you should never look at it again. You shouldn't grow it. You shouldn't trade in it. It is just terrible unless you're going to be short.
And Joe, do you remember what the commitments are? The commitments were on this. Are we like 100,000 funds short on this thing now?
I do believe that's a good point. Let's
a very big short, right?
Let's scramble to that right now and take a look and see what our friends have to say. Wheat, Chicago wheat, about 102,000 contracts short.
Yeah,
and your point is taken. With me being completely disgusted and never ever thinking about trading it from the long side again, and the fund's short 102,000 contracts, you've got two legs.
All you had to do for everybody was tell us.
Yeah, exactly.
Tell us, and we're going the other way.
Straight to the moon now. We need one more, and our friends at ADM talk about this every week. They say we need one more catalyst here. There has to be something that causes this market to begin to short cover. And as of yet, we have not stumbled into what that new catalyst will be.
Yeah.
I don't know, and we're at a loss, right? It is telling, I think, that you and I can run out of words when it comes to a futures market. That you and we could discourse on futures markets all day and well into the night, and we run out of words. And so that means that whatever it is that's coming probably is not far off. That it won't be the most scientific thing we've said all day. But if you are comfortably short, you should probably remain at the very least vigilant, and at the very most ready to take action to protect whatever profits you have in that contract.
Yeah, there's always a reason, right, to do something to get protective. When you're starting to see these little bits of reversals, depending on where and how you're short or you've hedged yourself off. I'm not saying that this is the place to just come in and buy it with two hands, but you are starting to see that constructive price action, reasons for maybe a low to form, sentiment hitting an extreme in one direction. Yeah, I think it's just a matter of time before we see one of those short covering rallies and a reason to actually come in and be a buyer in the week.
What's funny is you look at corn and you think, okay, with the low price of wheat, corn should be having a harder time turning here as we've done this week. We opened the week at 413. The high was
and actually, Joe, I don't mean to cut you off there, but
no, go ahead.
Let's take a quick second here. This is May of 25. Let's actually look at the December KC Chicago wheat spread here, because you kind of brought up an interesting point of, here we go, 81 cents. Look how tight this has gotten, folks. This is your December Chicago corn spread, 81 cents here. So how tight is that going to go to? So you've got this, even this market has hit a bit of an extreme in terms of the price of wheat relative to corn.
That's what that speaks to.
Wow. Look at that, right? It speaks to, I think, the strong corn demand we've seen, and then the lack of like any buying in wheat. Like this chart, if you covered up what it was, it looks just like your outright wheat chart. So at some point when you start to see maybe the key is here, look for that reversal signal here on this commodity spread, this December wheat to corn spread. When you start to see a bit more of a reversal here, maybe that's going to be the cue for the long and the outright wheat chart as well.
Open December corn this week, 413. High was 424 3/4. Low 409 1/4. Last trade we see is 422.5, up 9.5.
What a great looking bar.
An outside week. Yeah.
Yes, it is.
That is pretty neat looking.
And back over that 18-week moving average, which we don't look at a lot, but like,
nope.
Okay. It was also looked very much like a resistance line. And I think 18 weeks sounds a lot like, well, I guess it's very close to where the 100-day moving average is as well.
So I get a little freaked out with this kind of price action at this time of the year. Seasonally, my seasonal knowledge, little suspect. I must have misplaced my more research guide. But the idea that you would have this kind of price strength into the teeth of harvest here in the U.S., maybe folks aren't harvesting. I talked to a lot of people that are waiting for corn to dry down. For whatever reason, they're not out in the field coming after corn that aggressively yet. But then I drive by.
And those that are harvesting might be throwing it straight to storage, right? We may not be taking it across the scales yet either. If you've got on-farm storage that particularly, I'm going to go out on a limb here, but corn prices rallied quite significantly over the last 2 years. I don't know how many guys would have held on to $6 and $7 corn. So those that maybe use those opportunities to empty the bins and bushels from a couple of years ago, this is a year where I think you fill it right back up. So the idea that massive amounts of all the corn crops hitting scales right now and getting sold just doesn't seem, at least price action just doesn't feel that way.
So herein, we have, there's no question, technical strength. The way that we have got out above those moving averages this week, the way that we have taken out previous swing high. So I was on LinkedIn last night, Dan, and I saw, I can't remember which company it was, but God bless them, we won't use their company name, but they were saying, hey, look, here are some calls that some market calls that we made that were great. And they were going to review 2 or 3 things that they had done well over a certain time period, which I thought was just terrific. Some industries you can get away with what we would call cherry picking, or with what our compliance officer and regulatory bodies would call cherry picking, and is not quite on the list of things for you and I to do if we don't want to get a good talking to from the compliance officer, right? Or maybe called in to visit with the NFA rep. We don't do that. We don't do that sort of thing in this business. But I thought, how interesting would it be if me specifically, not we, but if I came at it from the other direction. Okay, so here we are on Friday. We have tremendous, what I would consider to be tremendous and timely technical strength. The way that we have come off of this near $4 swing to post, which was essentially a 424 3/4, a move from that roughly 410 back up to 425 in a matter of 4 days. Boy, Dan, the last 3 or 4 times this has happened, I'm happy to sit here and say, folks, you got to look at this chart. This is a breakout. You got volume, you got technical, you got some sort of fundamentals, we've got demand. Everybody should be looking at this and thinking about what price level they're going to sell their corn when we get back up to 485. 1, 2, 3, maybe 4 or 5 times I have done that. And so far, all 4 of those not currently correct, or AKA wrong. And so with the PTSD that I've acquired here from the corn market and these fake out breakouts, I got to look at this chart and wonder, are we setting me up for yet another pass at the football where I land on my back and start counting stars while Lucy laughs and walks down the street? Do you know what I mean?
It looks like a great technical bull flag starting to break out above your 100-day, 18-day moving averages, above the 55-day. You just got that 200-day looming above at 440, which I do think there's going to be some stiff resistance up there as you get back up into this old inflection zone where we held contract lows for the better part of this year until we finally broke them here. But this type of move up got all the strength and I think makings to potentially push on through if it wants to. Today, this was a good 3-4 day move, but today we did lose some momentum here, closing back inside yesterday's range. It was a green day.
Half hour.
Right. Like, okay, a little bit of technical weakness there into the close. It's a Friday, so do you hang your hat on that? There's still, I think, a bit of a trend line here that it's trying to break out of, but that's exactly what next week is going to be about. Do you get back above this level? Does it stay up here? Does it crunch on through 430 up to 440? And if it does, now you're back into this old range. And folks, a move up to 460, 470 isn't off the table because of that. $5 is a stretch, but I think with some other positive momentum and maybe even the USDA coming to reconcile, well, we're not going to get those numbers until it feels like January at this point. But the idea that if harvest comes in way short of what all of those numbers and expectations were, okay, I can see how we get a little bit of that rally into the end of this year, especially considering corn demand has been just through the roof. And if that continues, you've got a pretty good little fundamental storm here of over bearish expectations now having to be walked back at a time when the crop maybe wasn't as big as we actually thought it was going to be.
And there is a lot of discussion about yield and how that is going to ultimately shake out with numbers that have ranged from 185 down to 177, just a pretty wide range of what the possibility could be here going forward.
A lot of people are going to be wrong because of how wide that range is, right? Like that's just a fact, right? Anyone who says too high or too low, but the reality is probably somewhere in the middle. But I think this year, and you touched on it, and I think you said it perfectly before. Boy, without government numbers, these markets are allowed to figure out price for themselves. And without the government telling us it's a massive crop still, without analysts being able to say that and quote what the USDA is saying or whatever other survey results like we saw from some other institutions. Now that we're walking back on that idea, I think we're pricing in the damage we saw to the corn crop from rust and other things here into the tail end of the growing season. So, and into harvest. So yeah, all that being said, there's a reason I think prices couldn't break below 4. And I think that's the story for corn right now.
Another thing that I think is important too, that doesn't get a lot of traction, is that the way that these funds have been trading this corn, there seems to be some fund category participant that is moving a large number of contracts around. One day we're selling 12,000, the next day we're buying 12,000. At this time of the year, that level of what I would consider to be what I would call like chop, right? This with funds pushing all of these chips into the middle of the table, taking all of these chips out of the middle of the table. It doesn't seem, because we were down, funds were short 127,000 contracts. You're knocking on the door. You want to trade below 410. Had they pressed $4 and sub $4 was certainly in the picture. But all of a sudden, the fund trader category again, buying 10,000, buying 8,000, buying 12,000. And I don't actually have those numbers here in front of me now, but every day I look at them and I say, boy, that's a pretty big chunk. That's a pretty big line that these guys are swinging. And I can't quite understand why they would be doing that at this time under these circumstances. But as usual, the conclusion we come to, and correct me if I'm wrong, but this fund trading, it makes kind of a decent signpost for those of us out here that may not be burdened with too many signposts to look at, right? If the funds are buying in big numbers, maybe you want to respect that.
Don't step in front of that freight train, so to speak.
Don't step in front of that freight train, exactly.
And especially at a time of the year when that's really the participation right now, right? And the fund category's gotten so big in many of these markets. Look at what they're doing to cattle buying it up. Look at how they've smashed wheat into the floor. And in some cases, many would argue, in the face of fundamental reasons it shouldn't be doing this. Then we've got big volatility events in other macro markets. So as margin calls and things happen, as they need money in other places, I think like agriculture or and maybe some of these other futures are places they take that money back off the table at times as well. So there's been a lot of flip-flopping in positions. And I think I think what Joe is really getting at, and I completely agree, that's a show of the volatility that's in this market. While it hasn't moved agricultural products around, with the exception of cattle, of course, all that much. And I guess we're speaking of row crops, corn and beans for the most part when I say that. Yeah, I think that when they see their position not doing anything for them when they think it should, they're going and using that money elsewhere. But then headlines drop. It comes back to the table. China matters again. So let's get back into that bean and corn position, right? Like, and I think there's some truth to that volatility here is causing funds to come in and out of positions in massive strokes. It's not going to take much for all of a sudden a bunch of funds to be lined up doing the same thing in the same direction. And now you've got an explosive move. Especially
in corn, where there are some levels there where,
and beans
we talked about this. We talked about this earlier in the week with corn, where all of those positions that they had put on 3 and 4 and 5 days ago, all of a sudden were magically underwater.
Yep.
And the funds they won't stay. They won't keep those positions underwater, in my opinion, for very long under these circumstances. So we'll see how that plays out. Now, you said the magic word, which triggers us all, China. We opened the week in November beans 10.06. High was 10.21.5. Low 10.01. Even closed it at 10.19.5. That's up 12 3/4. That is pretty decent.
Yeah. And I'm actually kind of shocked. We didn't quite get up, like in terms of the weekly close, we didn't quite get up into this like middle of the range, so to speak. I mean, maybe we'll do that early next week, but I was almost expecting them to squeeze right back up to 1030, just because when you look at this weekly chart, I mean, that's just been the short-term range for 4 weeks. You step back and boy, the range on beans is just this 80-cent wide pattern, right? We've been talking about how beans are just trading a reversion to the mean. There's nothing to make them want to go up or down outside of this range yet. Okay, putting the conspiracy hat on here, you wonder what's keeping them so well supported above $10 at a time when we have zero sales to China. We've been otherwise worried about a massive crop here in the United States and a big one coming out of South America. How on earth did we stay above $10?
Let's go ahead and answer that question.
Felt like the worst thing in the world to ever happen to soybeans, right?
Let's go ahead and answer that question. The threat that we could set up a deal to send X number of beans to China at any night when you go to sleep.
The remembering the short-term memory, or I shouldn't say short-term, we're remembering back to 2018, 2019, right? The Trump trade war 1.0, where at the 11th hour, they came in, guaranteed, so to speak, the business they were going to do already. And for all intents and purposes back then, beans got the crap knocked out of them. We were finding lows, and then all of a sudden everything changed. And we were much lower than we are today. I think you're right, Joe. I think this market doesn't have amnesia to how the first go around with this Trump deal went. And I would be hard pressed, and I am still a firm believer that I think that even though China doesn't do business in terms of exports right now, they're absolutely in here in the futures markets participating at some degree, because it's very easy to get the business they want done on paper when they don't have to commit to it on a boat.
Shout out to Brad, who asked me this morning what odds I could put on this administration getting a deal done with the Chinese. I'll ask you, can you assign odds? What do you think is going to happen here?
100% a deal will get done. It's a matter of when. Neither China nor the United States can afford to not have a deal. It's absolutely insane to think either economy can exist in the current forms without each other. Yes, China has prepared for the last 5 to 10 years to be able to come to the table from a place of strength, right? And I don't think the United States has done that great of a job of that. We've been resting on our laurels, but we are still the U.S. We are still the biggest commodity producing country in the world when you take into account energy products and other things. We are the world's commodity market, right? At the end of the day, Brazil is being developed, and yeah, everything is great there, but you also still see capacity being hit, whether it's at the ports from infrastructure or just from the sake that Brazil is going to stop doing business with China when it stops being economical for Brazil. That's just what's going to happen. At some point, Brazilian farmers say, nah, they're worth more in the bins to me right now. And you're going to see a need to source beans and things from other places. All that being said, I think you come back to the idea that China and the United States will get a deal done. They will both use the opportunity to their best interests of political grandstanding. And there's going to be a win-win scenario here where some novel deal will be made at some point in time, gives Trump the victory that he can take back to his constituents to some extent, even though if you really look at it, it's never going to be as good as I think we want it to be. And then it gives Xi the ability to go back to his constituents and say, hey, look, we are able to strong arm America into a deal at some point in time. And in fact, if you look at the last week, the whole tweet that sent markets into a free fall, it ended up being a complete misunderstanding. In other words, China said something, Trump read it wrong, responded to that effect, and then backtracked and said, hey, I'm really sorry, we got that thing wrong. Yeah, well, billions upon billions of dollars of damage were done to capital markets first, but hey, it's okay, bro, I got you. And that type of mentality tells me that these two entities are going to come to some kind of conclusion. It's unfortunately just a matter of when and how long that's going to take. The deadline, I think, for it to happen is probably late into the fourth quarter this year, because that puts you out in front of Chinese holidays that start up in the following year and our own holiday season. So if I was to guess and put odds on the next 30 days of a deal happening, I'm going with a 65% chance that it happens in the next 30 days, a 90% chance it happens before the end of the year, and a 100% chance we get it before plantings next year.
My suspicion is that this chart tells you exactly where the negotiations stand.
That's a great point, Joe.
If you take a moment to look at this November bean chart, anything below, you see, we referenced earlier, you said, boy, we would have liked to close up over 230. We can't, because you've got three moving averages there that are bounding us overhead in a previous high. And negotiations that, go ahead.
No, I was just going to say, to that point, from a technical perspective, we got rejected there once. I wouldn't bet on it again, just because there's no new news. So I think we'll just price discover right back up to the high end of the range. But yeah, I don't think we get out, to Joe's point, I don't think you get that move out over, let's just say 1060 at the highest end, but even 1040 without that type of good news.
But I think that you may not need to be a fly on the wall at these negotiations to know whether they're going well or not. If you can get out over that 1025, 1026, that gaggle, that spaghetti there, if we can get out over those moving averages and you're in the land of 1040, I think the chart's telling you that maybe things are moving along. And you've got a couple weeks here. The timing on this is right, because you had Ascent discussing today, I think, with some high-level advisors, and you've got the possibility of a stated meeting that should and could still happen in the next 2 weeks, I believe, when they meet at that Asian summit. And so you get out over 1030 and 1040, I think the odds that you're going to hear some news that could take us higher are greater than if we're pushing back down near 10. Agreed.
And the other side of that coin is the negativity. It's going to take you down to test 10. And then if we get another, I think, round of saber rattling like we had last Friday that is directed specifically at agriculture and soybeans, that's how I think we dive below 10. If all of a sudden the deal in the short term starts to blow up and people are yapping at each other and not actually we all know how it could go, right? Trump says something nasty, Xi says, well, forget you. And then all of a sudden we're down at 10,980. But before we move on, I do want to point out and just let's take a quick look at this November option, because I've been tracking this $10 put, which another reason I don't think we've gone below $10, and I'm not so certain we will by next Friday, is because of these almost now 30,000 open interest on this $10 put. Every single day we seem to be adding to this position. It just keeps growing and growing and growing. Max pain right now for the market for soybeans is a close next week above 1020. We did that almost today, because you take effectively 11,000 options from 990 off, puts are gone. 30,000 from $10 gone. 12,000 from 1010 gone. 17,000 from 1020 gone. When you compare that to your open interest on the call side, it's peanuts. 8,000 compared to that are now in the money from $10 compared to the 29,000 puts. 16,000 compared to the 17,000. 1020 is the first strike where we're starting to see, 1010 as well. And I guess when you get up to 1030, my point is look at where that skew is. You got between 3 and 4 to 1, as many puts as calls at $10. And then the 1010, 1020, and 1030 strikes are all a lot similar. So you're just looking at where this market could go by next week in this option expiration. I personally believe there's a much smaller chance of this going down to $10 than up to 1030 or even 1010 versus 1030 just based on by next week, just based on these options alone. And of course, none of that matters. It's going to all change in a moment. But boy, oh boy, that's a big nut to crack.
The magic of
go down
market
there.
movement around options
Right?
expirations is well known, right? Who can this market stick
And that's
it to
not
the
saying
most?
that next Monday after these go off, we don't go below 10. But I'm almost willing to bet we're going to stay above 10 through next Friday just to make these 29,000 options expire worthless.
We had some strength in the products today as well, which normally we might gloss over for lack of
Beautiful close for meal.
Yeah, look at that. How about meal? Let's take a look at that. So also, just a quick note, in that bean contract, funds are long 8,000 soybeans coming into the day, estimated. Also,
and this is estimated from
bean oil.
ADM, right? So,
right. Yep.
That's about as close to a number as we're going to get. I don't think the CFTC is reporting those here either.
No, not for a little while yet.
So point being is we're neither bought or overbought or oversold there. So there's room in either direction when I hear that funds are basically flat on the beans. Maybe everybody's waiting. Maybe everybody is waiting, right? They're only long 8,000 here. You'd imagine them to have a 50,000 position in one way or the other. Maybe everybody is waiting on the sidelines for news about soybeans. Funds just aren't participating there, is what that tells me.
In meal, you opened the week at 275. The high was 281.70, low 273, closed back up at 281. That was up 6 full points on the week. And that, there again, to a smaller degree, outside week up
week higher. Yeah.
Yep. Something happened in there. Oil, real quick. It's almost the same story. Couldn't quite take out the low, but I still have December oil up here. I bet you that's not prompt. But that's okay.
It is. I don't know why I have Jan or why Jan came up, because December oil is there we go.
Probably decent participation there still. Opened at 49.98. The high was 51.77. Low 49.72. Closed at 51.13. Up 116 with an almost outside week up in bean oil as well. So some enthusiasm for the products in addition to bean oil.
Yeah, bean oil still in this giant bull flag we've been talking about, right? You had this constructive price action. All we've done is basically price discovery back down into various levels, creating this bull flag. We're back above that 18-day moving average, which is a great close for the day and into the week. The 200-day really front run a little bit here. Yeah, I think back over 52, that 100-day, this downward sloping trend line, that's where bean oil gets really exciting to the upside. Meal, very similarly, downward sloping trend line here. That 18-day moving average finally broke above. 55-day there at 284, 100-day in that larger sloping trend line up there at 287. But this is pretty, it's three waves. An Elliott wave guy would tell you, oh no, sell the heck out of this. It's overbought, blah, blah, blah. But look, you've got actually slightly increasing volume here these last few days. If you see that volume, that buy side volume really uptick.
We love to see that.
Right. You push up into these technical levels. It's not going to take much to put it out over that. And then all of a sudden you're retracing this much larger down move, and meal has finally maybe found a bottom for a bit. So yeah, maybe this is one of the better looking reversals or starts to a reversal that we've had in meal for a while. And I like to see that it's alongside even oil trying to get up off of its lows, and maybe even soybeans themselves getting a little constructive here. But I am cautious to say that both meal and oil, I think, are going to have a hard time to rally unless soybeans themselves can get out over that 1030, 1040, 1050 area and really sustain their own.
There's a quote that you and I were talking about this earlier before we came online. Here's a quote from Steve Fried, graybeard ADM analyst that we look at regularly to see what he has to say. One of the things that he's saying here this morning, China still not buying U.S. beans and may soon tap reserves for crush. That kind of caught my attention. So here you have it, a longtime ADM participant signaling that he, if not they, believe that the Chinese are going to have to get into reserves in order to continue processing. To me, that's an interesting statement. A lot of debate about the size and type of reserves that the Chinese have. Certainly they love US beans because they store better. Am I right about that?
Yep. Better quality, better storage. Everything about them is just a better product.
And so that would be this time of the year where the Chinese would begin chopping into some of the reserves they have that may be of a certain quality, crush that and then feed it, and then replace those reserves with your high quality US bean that can withstand the rigors of Chinese storage. Very interesting idea that the markets around the politics, the markets continue to do the seasonal things that they do. And that to me speaks to the idea, like you were saying, they got to get a deal done. We'll see.
It's in everybody's best interest, right? No, I do. I think that's also another reason why a deal needs to get done, right? Like if stores and stockpiles in China aren't as robust as maybe analysts believe, or they're frankly telling us they are, because I don't know anybody who's been boots on the ground that walks into a Chinese storage facility and counts beans on their own. Every piece of data point that I know of comes from the CCP themselves, which I won't trust it as far as I can throw a Temu-made car. So all that being said, I also, over the last 5 years, have been looking at a lot of data points that suggest China has not only just started doing that, they may have been eating away at those stockpiles for a number of years already, while back in 2018, really building them up into 2020, then 2020 starting kind of the period of starting to eat away at those stores, because quite frankly, price inflation in China did not hit foodstuffs. And that doesn't make sense when the rest of the world saw the highest inflation in the food category we have in probably since the 1970s. And food prices have quite literally been deflationary in China over the last 5 years since COVID. So the only way I know of that a country that relies on imports for food can do that is if they have a massive stockpile of food to feed themselves with and keep prices down, which is the way of communism. So yeah, I'm not so convinced that Chinese stockpiles are as robust as they were to begin with. And I think it is very safe to say at this point, they've got to be starting to tap into some of that for quality purposes or otherwise.
Or maybe they're not subject to the same corporate structure that we're
absolutely
subject to here in the United States.
Hoardings and everything else,
desperate need for share buybacks in an environment where things maybe shouldn't cost as much as we're being charged for them. Somebody's making money here.
Yeah.
How about, speaking of that, how about December live cattle? My goodness. Hey, you know what, Dan, before we talk about December live cattle, let's talk about Karen Braun. We're giving people a lot of information, right? We know it's a lot of information to take in. If you are looking for another perspective on these markets, sign up for Karen Braun's Zaner newsletter. Even if you don't think you have, you've definitely seen one of her charts online, and you can always see it because she's got a nice watermark behind it. She's got 86,000 plus followers on X. A lot of folks pay attention to what Karen has to say. No exaggeration to say that people are interested in her insight on markets. You and I often say
we don't know what we think until we've read what Karen has to say.
We love that. That's exactly right. Now, other folks can get her in-depth but easy to understand analysis straight in their inbox. She's always putting out great information. Estimates, debriefs around big USDA reports, weekly crop watch updates during growing and harvest season, analysis on historical data compared to current markets, and a lot more. We benefit from this every day. Folks out in the world can also benefit by simply signing up, putting in their email and phone number. We're going to call and say hello, make sure that you got signed up okay, have a conversation if you like, or bid you good day and part as friends if you prefer that. So it's very easy and comfortable way to get involved with her insight and maybe with us personally. Dan, having said that, jump back to the December live cattle market.
Complex. Yeah.
Goodness gracious. Open the week at 242.65, high 248.30, low 241.40, closed at 241.82.5.
Nasty reversal candle, huh, for that week.
Down only 70 on the week. That and this has happened before where we took out, where we dropped big time, and then you look at the weekly chart and you say, well, geez, we're only down 70. That's because the previous 4 days took us all the way up to 248, and we closed almost 6 points lower on the day here in December cattle, taking back all of the last 4 days. Dramatically higher price action. But
But shockingly not limit down there for the live cattle.
No, not limit down on live cattle. And interesting in that this came on, Dan, what are we going to ascribe this market move to?
Yeah, there's there has yet again been more posting and jawboning by the president about wanting to lower beef prices. Of course, anyone that has any real knowledge of what his powers and what they can do to do that, no, there's really nothing you're going to be able to do that unless there's a national stockpile of cattle and beef that I don't know about that we're going to dump on the market. I don't know how you would lower those prices, but without doing things like opening the border and all these other things.
Yeah, let's talk
right?
about that.
It's not a financial decision, right? There has to be other things.
What could it be? Let's speculate.
So there's obviously lots of talk and deals, it sounds like, being made with Brazil and the Brazilian-run conglomerates that pretty much control our cattle markets to begin with.
And that would essentially, for everybody who's not familiar, that would essentially mean product. They're going to ship us more processed meat that has already been processed, and then they're going to ship it here into the United States. And as likely per typical U.S. regulation, somebody is going to touch it here on U.S. soil, and then it will magically become a product of the United States.
Right. Okay. You're going to all of a sudden USDA prime is coming from Brazil. Yeah. Absolutely. And really, unfortunately, the real answer here is that we need to source animals. Like it's crazy to think that you're going to fix the cattle market and the cattle complex at these high prices. If you're going to knock down the price and hit the price of beef, you're undermining your ranchers and cattlemen across the country, which this is not in my opinion, the answer and how you're going to do it. But I do think that's why all of a sudden now you started to see a little bit of a spook coming into both feeders and fats, particularly the feeders, because what a runaway market that was.
They're also, speaking of feeders, they're also talking about jabbing Mexican cattle with a vaccine.
Getting them inoculated, and then
to protect them the border from the New World screwworm.
Which, okay, that's great. If we found a solution to that problem, awesome. But I'd love to see us rebuild our herds a little bit more systematically and safely, just from a sense of national security. And I think this is a conversation that we are all getting frustrated with, which anytime we see anyone from this administration talk about agriculture, it just seems to be a miss. Why are we talking about price manipulation when we should be talking about ways to actually support the cattle production, right? Ways to actually support crushing, to actually support soybean demand domestically. Like, why are we not talking about building out industry rather than, quite frankly, we sound like communists at this point, trying to manipulate price from the government standpoint. So I'm not too thrilled with what we are seeing and the stances that we're saying. It seems very ignorant, naive to the way the world actually works and where the rubber hits the road for agriculture. I can't say that any of these ideas are anything but a huge miss.
They could put animals on boats from Argentina and ship them up here. They could put animals on boats from Australia. Shout out to Jordan and Wisconsin, highlighting that idea repeatedly.
Yeah, and you know what? Maybe cattle prices had to go to these levels to make that economically feasible, because I can't imagine it's cheap to ship a steer from Australia or Argentina.
Imagine magic. So we could maybe teleport cattle from other places in the world to Texas and Oklahoma and some spots in the upper Midwest.
And if they figure out a way to do that.
Using magic, we can move. So, and here again, this is going to open the debate. And in some channels this morning, I understand a lot made out of the idea of should the government even be involved?
Yeah, my answer is no. Government should never be involved in free markets unless it's to support infrastructure development, because that's not manipulation and that's not, in my opinion, intervention. That's now a government looking at where their GDP comes from and actually trying to support and sustain it. And then just all around that could be changed. But I do want to come back to, it's not magic to get cattle here. Obviously, it's hard to physically move them. China has literal boats and things to do so with these hotel boats that we've seen for hogs, the hog hotels. Sure. Yeah. I don't see why we couldn't figure out a way to do it with cattle, but high prices like this are the only way you actually would see anything like that happen, because it's going to be an expensive venture. But if cattle prices in the United States are so much higher than the rest of the world, that cost is in there, might be built into being able to do crazy things like that. So days like today, though, take that kind of out of the scope, because now we're starting to see what might be price rationing of demand. High prices are the cure for high prices. So we'll see.
Can you bring me back to reality and quickly discuss the technical picture for December live cattle on a daily chart?
Absolutely.
10-day test.
Breakout, right? Breakout of this massive consolidation sideways that we've been in since September, where we were flirting with that 18-day moving average on either side. We broke back above it, broke above trend line, and up she went, right? All the way up to the new contract highs. Today we've pulled back, wasn't quite limit down there, but we did see it in the feeders. 18-day moving average, along with supportive trend lines, and a 55-day in that 238 to 335 area. I'd be hard pressed to think that we don't trade or have a little period of price discovery down into that area at this time. Below those levels, you really start to, again, unwind this much larger uptrend. And I'm not saying that that can't happen, because you're coming off of overbought conditions, which are now unwound thanks to today. And you did have a decent spike up in that volume. So wait, today was the first day of selling. Like you said, don't buy the first day down. Wait for a couple of days while this volume, if there is going to be a low down into 235, 238, you're going to see this volume trickle off over the next couple of days. You're going to see the market hold and be supported there. And then I think you're going to, if it does, you'll see that snap back to highs as commercials use this as the same opportunity they had in all the other pullbacks to get some business done. So, but respectfully, right?
Shout out to Mr. Olson in Minnesota, who beat that into my head when I was a kid. Never buy the first day down on these big uptrend, violent corrections.
Yeah.
Give it a minute to settle itself out. And
because it's got so far down before it breaks the long trend. Right. Like you can go, like we just talked about, another 5 to 6 handles before we're even into the technicals where we'd say a reversal is being confirmed, because one day down does not a reversal make.
And let's call a spade here today. I think you and I normally do a pretty good job of being politically correct, but what you had here today was a headline offered up to the algos. Algos grab the headline and then crash this uptrend party the best they can.
And tell me that's not a theme for this year, right?
Like somebody sold 10,000 contracts on the open, and then the algos leaned into it, a couple hundred contracts at a time for the rest of the day. That's what kept us here. And so simply on a reference to wanting to curb higher prices with the use of magic, we've come down 6 points and maybe take a trip to the 18-day. And what we would tell ourselves any other day of the week was, what did you think was going to happen? Did you think that you were going to rally 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row, and that you weren't going to get a test, that you don't deserve to have to weather a move to the 18-day moving average? But when it gets to the 18-day, Dan, I can't promise I'm not going to be buying a few calls here and there. I think folks should give that a real good look.
I don't think we've ever done a 10-day rally like this up where it was truly higher highs, higher lows, or truly green closes.
Record prices.
Exactly, right? Like every other time here, there's always that one little day that kind of ruins your 10 getting that far out. But that's amazing, Joe. I did not realize that. I think we set a record for the most number of green days in a row there into a high. Yeah. What did you think was going to happen? Is exactly,
what did you think was going to happen?
Exactly the response.
I'll try not to whine so much about what we see here and just treat it with some reality. There are no more animals available today than there were yesterday or a week ago. There are,
if anything, there's always less, right?
Right, exactly. And so, hey, listen, I'm not here to say, what does Ted always say? Prediction is difficult, especially about the future. I'm not here to say that maybe magically something can't happen. Right. Sooner or later, we're going to have to find a way to resolve this. But it's obviously likely going to be with market forces, and that with cattle, that's going to take some time. So this has obviously become a big person market. You better be capitalized, and you certainly better have a taste for this level of volatility. But if you catch the knife by the handle, you're a hero.
Yeah. Weekly on those feeders
takes us to a quick open for the week, which was pretty awesome there as well.
376 open on the week, highs at 382.80, lows of 371.70, closing right on that low for the week, obviously, because we closed the limit down today, and only down 420 on the week.
Only down 420. I was wondering if you were going to use the word only. Right?
Only down 420, even though you're 12 off the highs, which, by the way, folks, this puts feeders into expanded limits of 13 3/4 starting next week, which I want to just remind everybody, 13 3/4 points up from today's close. If it wanted to snap back on Monday, it literally could do a new contract high if it wanted to. I'm not saying that's going to happen, but that's the funny thing about expanded limits here, even on a limit down day. the market wants to go the other way, it can so with a lot more force and a bigger distance than it was on the way down. So
18-day at 365.46-ish, 360, what would that be? 365.45.
Yep.
That's a 50-day at 357. And I would guess that that's also pretty close to some sort of trend line support there. So you got
trend lines, right? Yeah, you got this perfect area of support is going to be down here, this 365 to 360 area. So again, we could get down there into Monday too.
Yeah, maybe we take a ride and see it. That's why you don't buy the first day down. But
exactly,
certainly high drama on Monday in the cattle complex. If folks were not paying attention, they should change that pretty quick, because you could. There's a couple different ways this could go. And both of them highly exciting.
Yeah, there's still bull trends until they're not, right? Like that's
for sure.
It's an uptrend until it's not. And we'd be stupid not to be pointing out where the support is in the short term, because hey, every time on the way back up, it gets bought up. Could this be the top? Yeah. Are there reasons to think that this is all coming to an end? Yeah, sure. But until we confirm that with price on the chart, it's not our job to come here and speculate about the future. It's our job to look at the market, react to what it's doing, read the tape, and then make a decision, an informed decision about what could happen, so that we're not creating a self-fulfilling prophecy.
I will find it highly, highly interesting and certainly highly educational. I've only been watching feeders and cattle since the 90s. Since the 2000s in earnest. Since the 2000s in earnest. And I'll be surprised, frankly, if we can find a way to put a top in this market without some ideas around heifer retention, without some ideas about more, without increasing the number of animals on feed. If you are going to
and I would agree with you, Joe. I 100% agree with you. The only other thing I would add to it is that the other way we could find it without any of that fun is if beef prices go skyrocketing and the consumer says, "Nah, I'll buy pork tonight."
And so,
which we're not seeing. I'm not paying $10 a pound.
Right?
I'm not paying $10 a pound for ground beef. The steaks are still reasonable. At least they're not pricing me out personally, but there's definitely somebody's buying it, and everybody. I'm still eating red meat, and I think generally the consumer still is too. You don't see prices at McDonald's going up massively. You don't see where Texas Roadhouse is still full at capacity. When those institutions start to really get hit by the price of beef, then we're going to start to see the reasons for cattle prices to come off the top, for box beef to really fall off, right? We're not seeing price rationing of demand yet, which is why both Joe and I agree that without this other supply side thing going on, we're not seeing the price rationing of demand. So you need the animals or something else, right? The other side of the equation to come in here to stop prices from going up.
The only thing that I can really see is if you begin to flood the U.S. market with foreign product. If you start launching Brazilian beef into this country, if you start launching Mexican beef,
which is just another form of supply, right?
So you're going to crash the box beef market here. You are then going to crash the fat cattle market here.
Feeders follow.
And feeders may or may not follow, depending on how that works out. But then here again, you've got the government picking winners and losers, because those folks that paid $3,000 for the 400 feeder cattle, $3,000 a head for the 400 feeder cattle that they have out in their yard, are going to get creamed.
Which should bring us to a kind of, little bit of, let's just do a shameless plug for ourselves as marketing professionals, folks.
We might be able to save your life.
We might be able to help you with that problem. That's exactly why Joe and I exist professionally. So if these are still prices, and we said this the whole way up, if these are prices that make sense for your institution, for your bottom line, for protecting that $300 feeder you bought, we can help do that. And that is exactly why you need to come talk to us before another day like today happens and it's too late. Because I think what Joe just said is going to be the way it goes, unfortunately, in the short term, which you hate to say it. Joe, I think you're right. Like, if they're going to bring in beef, cheap processed beef, to smash this market and keep prices down, you're gonna screw the guy holding the $300 head. And
just to be clear,
if
I don't
anything,
think they're going to do that.
But they said they're going to do it.
They
said they're going to do it.
Well, they use the word magic. I don't know that that's magic.
I don't know
until we see more details. I would say I'm not sure that's a good idea.
But right, how else do they do it, right? Like, that is the game theory this out. Like, what is the easiest way? if that's the way it goes, for all the more reason that the cattle on feed, the feedlots and the cattle on feed producer needs to be protected here, because they're the guy whose pocket is going to get hit.
For sure. I'll leave it at that. But I would say that is a massive undertaking and will result in even more pain for the U.S. agricultural sector, which is already under significant duress because of politics. And so I don't know that's the kind of course of action that you want to undertake when you are trying to.
Neither one of us are agreeing with it, but we have to paint the picture as we see it.
Good point for sure.
It's unfortunate, and that goes with soybeans too. If U.S. doesn't get a deal with China, if China really is out of the picture, why are we putting beans in the ground at all? We only need to grow what's 200 million times 12. We only need 2.4 billion bushels to hit our domestic demand from our NOPA crush reports, which are running red hot, by the way. We had record production in our last NOPA.
Great work there, no doubt about it.
So and I actually think that even surprised our analyst team to the upside of how much they're crushing at a time of the year when they don't normally crush as much. And the fact that our capacity might be like growing here a little bit better than maybe we thought, which is awesome to see. That's the type of development that you want to see in an agricultural market. But we are still a long ways away from making up for the bushels we'd sell to China. And again, like all of these things need to come to a resolution sooner rather than later. And you like to hope that we're moving in those directions.
Certainly do. God bless.
All right, America. Well, we got to have a question for the week here. If you could live anywhere in the world for a year, where would it be? Joe, I'll let you start.
Indiana.
You're so cheap and easy.
We got a lot of really great things going on here, so I would probably stay. I don't know that question, and you know how I do when the questions catch me off guard. That's a tough one. I don't know.
Okay,
I got to
not your hometown. Where are you going, Joe?
Yeah.
Gun to your head. You got to get on a plane or in a car and drive at least 200 miles away from your house. Where are you going?
Iowa. I heard Iowa's almost as good as Indiana. This time of the year, they got some winter. They got some. So to be honest, not that
I hear a guy that likes the Midwest.
Yeah,
you know what you like, and you like what. And there's nothing wrong with that.
Twist my arm. I guess it's either Wisconsin or Minnesota. So it could be. No, I'm being silly. I think if I'm being sincere, it's probably got to be Texas.
Yeah.
They got their own electrical grid down there.
Don't mess it. Texas has it figured out. It's always bigger and brighter. I hear that.
Says they got a lot of nice girls there as well.
I hear. Yeah, I'm probably going the Outer Banks in South Carolina.
That's
slow life down. Give me some shellfish and I'll live on a beach. Doesn't sound too bad.
Yes. Yeah. And then the other question we got to ask back is Carter picking up the tab, because I'm going someplace fancy in Texas. If we're doing it on Carter's dime at marketing money, you know what I mean? Yeah, probably Texas.
Break out the old credit card. Well, thank you for listening to the Zaner MarketCast. If you need more just because you can't get enough, you can follow us on Facebook, Twitter, and LinkedIn at Zaner Ag Hedge. Also, get our daily market commentary for signing up with the Zaner Ag Hotline, hosted by Ted Cypriot. Best part, it's absolutely free and gives you access to our daily market commentary and a chance to connect with us personally as a whole. If you have any other questions about the markets or agricultural commodities, links for that are down in the comment section below. Thank you again, and we'll be back with you as price action develops.
Have a great weekend, everybody.